Today, we're going to talk about the constraint layer in the agentic economy and what that means for wallet infrastructure providers like Privy, who need to maintain the controls around the wallet and not necessarily just providing the wallet infrastructure. Because we don't want agents to just go rogue, as they say. So today we have Max Segall, the COO of Privy, who focuses on agents and wallet infrastructure that recently actually got acquired by Stripe. So, Max, can you tell us what is an agent wallet and how is this materially different from an embedded wallet or like a human driven wallet?
100%. So at Privy, we build infrastructure that allows you to provision wallets so you can embed crypto into your product. So we got off the ground serving many of the sorts of companies people think about when they think of crypto, like Hyperliquid. You could sign up with an email, get a wallet, and start trading. Pump Fun, Farcaster, Zora, OpenSea, all of these traditional crypto products. And as we were building and as agents started becoming more popular, people started using our wallet infrastructure to allow agents to manage digital assets. And so an agent wallet is just using Privy to spin up a wallet and have the agent manage the wallet. And as we've supported more of these use cases that have gotten more and more traction, there have been a whole host of features that are specific to agents that aren't as important when you have a human managing the wallet. And so we've basically built an entire product capability set specific to agents. We have an agent CLI, we have a policy engine, we have compatibility with agent payment protocols, and a bunch of other things that I'm excited to dive in on.
Nice. So you guys are building this wallet infrastructure, and one of the branches is this agent wallet infrastructure that has exposed kind of a new set of problems in that space. Before we get into like the particulars of those problems for the agent wallets, can you describe like who are these users and what are you noticing people using these wallets in the first place?
Yeah. So we, about a year and a half ago, I think, or a year ago, we had our first big breakout agent managed wallet customer, this company Banker, that many people in the crypto world are familiar with. It's a bot that lives in the X feed, and anytime you tag it, it takes an action on your wallet based on what it was prompted to do. So I could say, I, Max, want to send $10 to Gabe. It spins up a wallet for Gabe. It sends 10 stablecoins from my wallet into Gabe's wallet. And then Gabe, you could say, I want those $10 to earn yield, and it would sweep them into a DeFi protocol for you. And people started having a lot of fun with this new crypto form factor, and it started driving, tens to hundreds of millions of dollars of volume in Privy wallets. And as these wallets got more usage, there were all sorts of new demands. Like at this point, the quality of agents was a lot lower than it was today. And so it was very likely that when you prompted the agent to do something, it would misinterpret your prompt. And so this was a big driver of our policy engine feature set and, allow listing certain receiving addresses. So if the agent, misinterpreted your prompt and hallucinated, the wallet actually can't physically perform the action that it interpreted. Like it can only perform what you design and lock down the wallet to be able to do. So supporting early builders like that, like Merit, like Nevermind, and a bunch of the very frontier builders in the agentic, the agent managed wallet space allowed us to have the right tool set in place. So when there was like the massive OpenClaw driven agent explosion that we saw in the beginning of this year, we were ready with the capability set. And at this point, a third of Privy signups, we have like hundreds of signups a week for Privy accounts. A third of them are using Privy for agent managed wallet use cases. And it's a bunch of frontier builders pushing the limits of what's possible. There are a few popular patterns we're seeing, a couple of shapes that are pretty common. One is people who want an agent to portfolio manage. That's actually a product shape that works quite well today and is showing like real value at scale. We have a company Glider that does this. It's, I think, one way to think about the value prop is it's like a betterment on chain enforced, and you can set up a wallet, give an agent a set of rules of how the portfolio of assets in the wallet is managed, and then just let it run on autopilot. That's a very popular use case. Another one is for payments and actually like consumer driven payments. So you get an OpenClaw set up, or you have your agent working for you. You spin up a wallet for the agent, and then you just prompt, the agent is prompting it to make payments for you. That's an explosive design space right now. And we just launched with AWS, I think it was 2 weeks ago now, that their AgentCore platform, their agent builder platform, natively integrates Privy Wallet so that agents you create on the platform are provisioned along that we set them up with wallets, and they can make payments across the x402 ecosystem. We did a similar thing with LangChain and their agent building capabilities. So that's a super, super common use case. Give the agent a wallet and let it start paying for things. And then the third very popular use case, and we're seeing dozens of great teams building this, are they're almost trying to become, ironically, like Stripe for agent payments. And we're a part of Stripe, we're owned by Stripe. And these teams are building marketplaces where an agent can come in, and there's a marketplace of services they could purchase. Like they could purchase one unit of SMS or one unit of compute, and it allows for per use microtransaction based services, so the agents can do whatever work is needed of them. So the agents can drop into these marketplaces like Sapium or like Lava or like Orthogonal. There are a bunch of great teams building these types of products. Actually, Stripe has our own version of it as well. And they can drop in, they could purchase services. It's all happening on crypto rails with microtransactions. And that's another super exciting design space that's opening up.
Nice. So there's the portfolio management, payments, being able to provision and just pay for things with the wallet, and then the microservices. On the microservices side, are those type of services similar to like Agent Cash or Locus? Is that the
Yep.
same?
Same. There are so many great teams building in that space right now.
Okay, got it. And then just for clarity, these products are basically allowing you to provision a wallet in like your Codex or some type of agent tool, and then it can pay for microservices through like x402 and MPP, and that's what you're saying has been another big use case.
Yep. And it's both sides of the transaction. So it's the agent having a wallet to spend on the services, and then the wallets are useful for the services. So you can have a Cloudflare wallet or a Twilio wallet, and you could really open these platforms up. So it's not like the platforms need to integrate services one by one and have umbrella API keys. You could have a payout wallet accumulating value for the service to claim.
Interesting. Yeah. So we've kind of only talked about so far, just on the show in general, like the services that are provisioning wallets for the consumer. And then you're saying you're supporting both the consumer and the enterprise who's basically providing the services, the micropayment services.
Yeah. So it's, I mean, the whole space is at the frontier stage right now, but we need a way for the service providers to get paid as well. So that's either going to look like there's a wallet accumulating value for the service provider to claim, or there's cool stuff we could do as Stripe, or other merchant side products that can, like, cool stuff we could do as Stripe, or other merchant side products that can like automatically convert the inflows into fiat outflows.
Got it. Okay. And correct me if I'm wrong. I'm gonna try to like extrapolate this higher. So if I'm the end user and I want to pay for a microservice that will tell me the price of Bitcoin, then I would use one of these like agent payment services that can use x402 and find a provider. Let's say the provider is CoinGecko, but you guys are working also with CoinGecko to accept those payments as well.
Yeah. So it's these marketplace services are either giving CoinGecko an interface to plug into so that they could provide like per use services to agents and get paid for that. Or obviously Stripe is investing a ton on this front as well.
Nice. And specifically, what are these different policies or pieces that become important that's different from a normal wallet? Like, what are these things that that you've accumulated from? It seems like just real customer interaction with like banker bot. What are the particulars here?
Yeah. So the way the Privy wallet works is when we spin up a wallet, we split the wallet's private key that controls the wallet into shares. So there's never a single point of compromise with the Privy wallet. And then you, as the developer implementing Privy, you configure who controls the wallet. That could be an end user like you, Gabe. It could be an agent that's controlling the wallet. It can be our customer can have full control over the wallet. And when the controller of the wallet initiates a transaction, the key shares come together in a trusted execution environment and execute the transaction. And the trusted execution environment is there's sort of like a checkpoint in the trusted execution environment to make sure, does the transaction satisfy the conditions that are allowed on that wallet? And that's how our policy engine works. So you could say, an agent managed wallet can only transact up to $100 of value a day. That's like an example of a policy. And so if you're trying to put a $120 transaction through, when, even if the proper owner of the wallet initiates the transaction, if it violates the policy, it gets blocked in the T and it cannot execute. So we've built our policy engine. So many of the features of our policy engine are built around supporting these agentic use cases and preventing, if a prompt is misinterpreted, let's make sure that value doesn't go where it shouldn't. So if, an example, Madeline, who leads a lot of our agentic work at Privy, loves to use is like, if the prompt is, I want to buy a boat neck sweater, and the model interprets like that as I want to buy a boat, then that purchasing a boat transaction is not approved. So the policy engine, it's super expressive. Like if you can think it, you can design a policy around it. And that is like one of the largest features and one of the most important features for agent managed wallets. Another one is it's related to policies. It's what we call quorum approvals, and you can designate rules so that if a transaction meets a certain set of conditions, maybe the agent managed wallet requires the user to also approve the transaction. So that's another feature on the security front. We have all other sorts of things like allowed origins to make sure that certain types of transactions need to originate from certain sources. So, maybe transactions under a certain amount can be fully managed via an agent, and transactions over a certain amount need to be managed in an interface. You could also start with a user wallet. So you could get a wallet in Ramp, one of our customers, and then you can delegate the management of that wallet to an agent for certain actions. So you could start in like a traditional product, a traditional like user wallet, and then have the agent take over and start making certain transactions for you.
Oh, wow. Interesting. So in that last example, let's say I'm trading them, say, okay, actually I want to have the agent do these little rebalances. You guys support infrastructure to allow both at the same time.
Yep, exactly.
Nice.
So all sorts of rules and controls you can put on it, which a lot of that functionality was born from supporting early agent builders.
Got it.
And it's cool, like a lot of the fintech companies who are doing nothing with agents yet, they want the same rule set. Like they feel great about being able to either blocklist receiving addresses or set transaction limits on wallets. Like a lot of these features that were built to support agent builders are useful to companies like Deal or Klarna or Ramp.
Nice. And why do you think can you help us understand why this design decision is not put on the developer side or on the user side, as in, maybe I can put in a prompt or maybe some code that says, okay, don't spend more than this much, right? As opposed to moving that into the actual wallet infrastructure side. Can you help us understand why that is important or is something that you guys have taken on specifically?
Yeah, so it's flexible to the point where the developer can expose creation and enablement of those rules to the user. So the developer could say, I actually just I don't care who my user is. I want to protect them in these 5 ways, and so I'm going to put these rules on the wallet, and that's easy to do. And then you can have the user. You can give the user the ability to set either like MFA controls or transaction limit controls as well. And then that gets enforced by the same policy engine under the hood. So it's a very flexible product that allows you to protect your users if you'd like, and it allows your users to like progressively secure their accounts if, say, the asset value in the wallet exceeds a certain point.
Got it. Okay. So you guys are taking the decision of basically cutting a lot of the risk, and then the user can basically expose that risk. And by doing that, it's at the wallet layer that it kind of gives the most leverage for that.
Yep, exactly.
Nice.
So I think the big thing to call out is like there is so much excitement about this space right now, but it's also very clear we've just scratched the surface of what's possible. Like many merchants still don't accept stablecoin payments, and that's changing quickly. But as we at Stripe make it easier to accept stablecoin payments by default, and other merchant facing payment tools do similar things, like the capability set's going to evolve a ton as we just have completely new, unexpected use cases emerging.
Yeah. Are there any use cases that you think are going to be bubbling up that you're seeing early right now, or pretty novel implementations, or is any things that kind of break from those three that you explained before?
People are doing all sorts of crazy things. Like it's really, the sky's the limit. Like if you can imagine it, you can build it. But the big limitation right now is the fact that many merchants don't yet accept stablecoins, and I think we at Stripe have like a big role to play in addressing that limitation. We actually just today made MPP enablement a self-serve. Any merchant, regardless of where they are, can turn it on today, and that's like one of many steps that we're taking as Stripe to make this easier. And then the other thing that is pretty cool is that you can, with a Privy wallet with stablecoins in it, you could provision a card on top of the wallet, and then now you have a way of facilitating transactions from the wallet even if the merchant doesn't accept stablecoins yet.
Mhm. It seems like Stripe in your guys' positioning is pretty unique, because a lot of times early technology, right, has to like overtake the incumbents, and that's usually done by like distribution or like virality of the products. But in your case, and kind of for the broader ecosystem, Stripe is really like one of the big gatekeepers here, and they can essentially just like turn the lights on. So I'm sure that you guys have some friction maybe, and like what are you seeing as the path typically for building? Is it like, okay, you guys are co-building, or do you kind of feel like you're like a lab? How is this dynamic, especially as they're like a gatekeeper in this case?
You're saying like how do we and the rest of the Stripe team work together to facilitate these types of products?
Yeah.
Yeah, so we have been operating as Privy for the last year, even though we're a part of Stripe's org. And so we're building as close to teams who want to access this tech as possible. And the idea is like the crypto landscape, the way stablecoins are being adopted, like it's changing so quickly, and we need to get the modular products as close to developers as possible. So when a team like Banker, when a team like Merit Systems wants to push the space forward and reimagine what's possible, like let's give them the raw building blocks and stay close. And whenever they need something, whenever the product doesn't work well, let's evolve it fast. So we're doing that. And then we're building Privy into and wallets in general into many of Stripe's biggest products and making them stablecoin fluent by default. And we almost have like a customer relationship with Link, for example. We just announced that like Link is going to be holding balance, have the ability to hold balance by default built on stablecoins, and that's us working closely with the Link team and treating them like they're our biggest potential customer with 200 million users, and so we work super closely with all the product teams across Stripe and try and find ways to take the same tech that we're like rapidly iterating with the frontier builders with and bring it into our own products.
Got it. And for all of these different stakeholders, I'm sure not everyone feels the same way about crypto and kind of like this revolution and decentralized finance and such. But from the executive level, is there buy-in across the board? Like talking to the Link team, right? Link is in like a lot of products. When you're paying for stuff online, you can kind of do the easy checkout with Link, and they've really nailed that in as a tight product. So, like, are you finding friction in these conversations, or is it really like a hot lead and you're just onboarding them as a customer?
Yeah, I mean the amount of like top-down buy-in on stablecoins at Stripe is like the most exciting thing I've seen. I was at Brex for 4 years before joining Privy in 2022, and I decided I needed to work in crypto after like trying to build products on fiat rails. Like I just kept running into all the limitations of ACH and the other popular payment methods that Brex is built on top of. And so that was like the catalyst for me getting excited about crypto in the first place. And now it's playing out in the biggest imaginable scale with Stripe leaning in as hard as it is. And, in order to deliver Stripe value to, as many people around the world as possible, and in order to really create instant frictionless payments, no matter how big or small they are, like crypto is the enabling technology that makes that possible. And so there's tons of top-down excitement and pushing teams to think about, can we deliver this experience we're trying to unlock with crypto rails? And we're featuring all of the most exciting things happening on Privy's tech stack in Stripe firm-wide company all-hands meetings. And that's honestly inspiring a lot of the building that's happening at the product team level. And it's really cool. And this isn't just happening at Stripe. We see the same thing happening with our biggest customers, or our biggest fintech customers as Privy, where teams will see P2P payment experiences being built by crypto native teams. And, next thing you know, Remitly is trying to replicate that with their user base of tens of millions of users. And Revolut and Robinhood are keeping a close eye on like all of the trading and investing use cases that are working on the crypto side of the market and figuring out, okay, what can I deliver to my tens or hundreds of millions of users? So it's this like super exciting moment where the things that are happening at the frontier, the crypto native teams that are just like defining the products that can work, are inspiring things happening with teams who have access to tens to hundreds of millions of users.
Mhm. With what you're seeing right now, I want to pose this question as kind of like a three potential answers, and maybe if those don't fit, then you can come up with your own. But I'm curious, where do you place your bets on going to be like the largest economy? Do you think it's going to be on the like B2B stablecoin side, or like agentic commerce, or like where the autonomous agents are basically buying and selling services? Or do you think both, like, or between both, and yeah, of those three, I'm curious where, just from all the stuff that you're seeing, which lane kind of seems like is going to be the biggest, or have kind of the biggest outcomes?
Yeah. So our mandate is just like anything real, big, impactful that has PMF built on crypto rails. We want to be the infra behind it. And we are like super ear to the ground nimble on picking up on, where there are trends that are working, where is there like real value being delivered with crypto. Right now, I mentioned a third of our signups are agent managed experiences. Most of those are not working at scale today yet. They're experimenting, and there are teams that are breaking out with use cases that are driving a ton of volume. The three I mentioned being like the three big main ones. And so that's a massive investment area. And we just like have irrational conviction that like in 10 years, there are going to be more agent facilitated payment transactions than human facilitated payment transactions. And that's going to happen on crypto rails. And we need to make sure we can support everything that builders are trying to unlock with that. So we're investing a ton of product energy there. And then fintechs, every big fintech, you go down the list of the top 20, biggest or most valuable fintech companies, like they all have some stablecoin crypto strategy, and just making sure that we're able to address whether it's delivering native yield or payments to countries worldwide or unlocking access to markets they can't serve, making sure we have everything we need to support those use cases. That's massive, growing quickly. The crypto native side of the market there are pockets of explosive growth. Hyperliquid obviously is like a very top of mind thing. They were one of our earliest customers, and there's a whole ecosystem of teams building on HIP-3, HIP-4, unlocking use cases that are getting really quick PMF, like being able to trade commodities over the weekend, or being able to create markets around the valuation of private companies. So lots of cool stuff happening there. And then those three use cases: agentic use cases, fintech use cases, crypto native market use cases, whether it's perps or prediction markets. And then the fourth are treasury use cases, people who are reimagining how do you build business, finance, operations, infra on crypto rails and make that more efficient. There's a ton of work at Privy happening on that front too.
Wow. So you guys are playing in a bunch of fields, and what you're saying is the commerce side for payments with like these neobanks and upcoming startups is basically where like this hardened use cases, and then on the agent side is like R&D and basically fine tuning. Is that a good articulation of that?
Exactly. You've got it.
To kind of circle back a bit on the TEE side, the trusted execution environment, could you explain the reason why you guys took that decision, and like what that actually enables for agent wallets and even just payments in general?
Yeah. So it is, we are big fans of TEEs. They're the gold standard of security. They are extremely locked down. The AWS Nitro enclaves that our TEEs are built on top of they're default off the network, and they are secure, and they're extremely they're really well suited for these like checkpoint controls. So whether it's a policy engine or a quorum of approvals, like you can at the T level enforce in this is enforced entirely by code, that if you have a policy in place, like if the transaction does not comply with the rules of that policy, it's like physically impossible to get that transaction through the TE. And then the other thing about TEs we love is everything that happens in the TE is verifiable. So there's a proof that you can go back and reference on exactly what happened, what conditions were met. And that is a great audit feature to make sure that the system is doing what it is designed to do.
Interesting. So this environment is more robust for being able to execute the policy and the logic and all these different like functionalities for the managed wallet.
Yep, exactly.
On the AWS side, just to break a little bit, so you guys partner with AWS to basically facilitate like micropayment services on behalf of Amazon. So they have like this managed agent service, and then you guys are rolling out your service in collaboration. What are they kind of after there, and what do you think this enables in terms of like distribution? Because Amazon is such a beast, and And really, this seems like a distribution opportunity, not just for you guys, but for other projects, etc.
Yeah. So they are an they're the whole suite you need to stand up and manage an agent for your product. So they're trying to be like the one-stop shop you can go to build and manage your agent. And I think payments is, if agents at the highest level or kind of like code that can perform or intelligence that can perform work, being able to participate in the economy is a core part of performing work. And so it's important to them that the agents that they're allowing teams to build have a way of paying for things. And I think there's like a pretty big philosophical race happening when it comes to payments of like, are these payments going to happen on card rails? Are they going to happen on crypto rails? Is it going to be a combination of both? And I think they recognize that there are some really great advantages to payments happening on crypto rails. For one, it's permissionless to spin up a wallet. And so when you have an agent autonomously, maybe spinning up a sub agent for a task, like getting that agent access to an account that can hold money and pay for things, it's much easier to do that with a permissionless system than getting that agent access to a bank account, which is the traditional way of getting a card. Like getting that agent access to an account that can hold money and pay for things, it's much easier to do that with a permissionless system than getting that agent access to a bank account, which is the traditional way of getting a card. But then you have the roadblock of many merchants don't accept stablecoin payments today. So you need some way to, if the agent wants to participate in the economy and the counterpart they're trying to transact with doesn't accept stablecoins, you need some way to allow that agent to access that service. So AWS integrating wallets natively, integrating Privy and our agent managed wallet capabilities natively. This is them saying, they see this building block as a part of their offering.
Got it. And is this why you guys have the card? Is that for agents being able to spend, or is that more on the human side?
Yeah, we have the card. I mean, the card, it's similar to our policy engine. Like it came out of requests on both the human stablecoin wallet side and the agent stablecoin side. So our card capability is like one of the best examples. One of our flagship customers is this company Arc, used to be called Dollar App. They're the fastest growing neobank in LATAM. And their big value prop in the beginning was help people in LATAM save in dollars. And so if you wanted to get paid, you live in Argentina, you want to get your paycheck in dollars, you can give a regular account and routing number so the paycheck can go into what feels like a bank account. And then Bridge, which is another subsidiary of Stripe, they converted the Argentinian peso payroll into stablecoins. And so the dollar account balance was denominated in dollars. And people, in all the markets that Dollar App launched in went crazy over this value prop. And they were saving in dollars. And then, the big question is, well, like everything is stable coins behind the scenes. But then the big question is like, how do I actually use those stable coins? And being able to provision a Visa card on top of the wallet so that, you could go onto Amazon and purchase things, or you can go to Netflix and purchase your subscription, or even go to a grocery store and put down a card. That's like the big unlock, because most of these services, especially then, didn't accept stablecoins. And so it was built around just this like acknowledgement that people want to hold crypto assets. There's like a ton of value in holding crypto assets, but you need a way for those assets to be spendable in the real world.
Got it. And for you guys, like everything seems to be denominated in USD, like across the board for these payment services and for even the agents. Are you guys seeing any certain areas where like the denomination of the currency is not always dollars?
Yeah. I think that's one of the most exciting trends right now. We work with a bunch of local issuers at bridge. We have a bunch of local issuing capabilities as well. I think it's like reasonable to expect that people are going to want to hold stablecoins, hold local currency stablecoins. So I think, in terms of like growth areas that I'm extremely high conviction in the crypto ecosystem, that's a big one.
And for what you've seen, what are like those actual use cases? Is it for kind of like consumer day-to-day spenders? A lot of trading happens in US dollars. So yeah, like where for those new denominated current digital assets in different currencies, yeah, where are you seeing those specific use cases so far?
Yeah. Um, it's just people who like don't want to think about currency conversion. Their entire life is in Brazilian real, and they want to hold balances in Brazilian real. They don't want to have to like worry that, oh, some macro event made this transaction I was planning 3x more expensive in, a very volatile currency country. Even though, saving in dollars might be advantageous, the like certainty of the value of the transaction is a priority for a lot of spenders.
Okay. Yeah, on the builder side, where are you guys seeing people blowing themselves up essentially when using agentic payments or even just kind of these payment services in general? Like where do you guys see the most risks for builders, developers in general?
I think it's the same biggest risk we've seen from the beginning at Privy, which is when you're building tools for a frontier market, there's a very big temptation to take like the newest tech trend and build the product around that. And so when we were getting started, like account abstraction was like the big new capability. But ERC 4337 had just come out. There was a new way to sponsor gas payments. And there was a whole wave of builders in the beginning when we were first getting Privy off the ground that would come to us and say, we're building an account abstraction app. And I was like, what does that mean? And they're like, oh, well, now I can sponsor gas. So we're building a product around that. And that is not the product. There's like no inherent customer need behind that. That's just a tool to make building the product easier. And I think the biggest risk by far is like right now there are so many new tools coming out and people are looking at the tools and saying, there's my product idea. But starting with the like, what is the real world experience we want to unlock? And then let's look at the tools we have at our disposal. And maybe stablecoins and crypto like aren't the right tool for it, and just being like super pragmatic about what's the best way to deliver this value to the world and going problem out versus tech out. I think that's the biggest risk.
And do you have any like example of these currently right now? Is like these hot trends essentially on the tech side or even like the research side as like these protocols start bubbling up?
Yeah, I mean, like agents are very cool and very useful, but like an agent might not be right for facilitating the either payment activity or investment activity that you're trying to use. So like, agent out is, I think, it's similar to like ERC 4337 out. It's like, let's actually think about like, what are we trying to build? What are we trying to drive? Does an agent make sense? Increasingly, agents are super powerful, and so for many activity, it will make sense. But like, don't start with, oh, we have agents now, let's build something with it. Start with, this is the problem I'm trying to solve. Let's figure out how to do it.
Hmm. Okay, so even the overfitting of agents right now as pretty like a pretty hot topic, AI agents is one of these things that you're noticing as well.
I mean, it's a third of our customers at Privy, so it's pretty crazy. Like how many teams are excited about this, rightfully so. It's like the most powerful thing I've like seen available to people, but making sure that you're thinking about it from this is the problem I'm trying to solve, and this is why it's a good solution to that problem is the right way to go about it in my view.
Yeah, I just having these conversations. I've noticed a lot of strong builders are using like some deterministic code to facilitate like large portions of their operations. And then the agents are kind of just orchestrating these tools, like these deterministic tools. Maybe it's for trading or like market making, security. So yeah, definitely the overfitting. I agree on the agent side, has been a big thing. I'd say to end here and just the final question of all the stuff you're seeing, I'm curious, like, where is the alpha? Is there like any type of companies or team or new primitives that you're seeing evolving? And it might not have to do with agents. It might just be kind of trends amongst customers or stablecoins in general. But I'm curious to see like where would you stake your bets at this point?
It's a great question. I mean, there are lots of cool things happening around agents. So I think it's a great place to be spending time. The thing that like I've always been really bullish on for teams that are like building crypto into their products are the fact that like crypto rails give you like it allows you to build like anything into a super app because of all of the protocols you have access to and things are on crypto rails. So, you can take stable coins in a wallet and invest them and convert them into any, other on-chain investable asset. And increasingly, that's a pretty big universe. It's not just like ETH, Sol, and Bitcoin that are thought of as like traditional assets, but it's like tokenized stocks and commodities. And, you could take positions on prediction markets. So that's one example. You could also, take stable coins and very quickly build P2P payment, like Venmo-esque experiences on top of them. You can invest them into DeFi. And so like, I think these neobanks that are building on stablecoin rails and like able to hold stablecoin balance, like they're going to quickly become super app type companies like Robinhood. I think that's a really underrated trend. The fact that crypto rails allow you to turn any consumer app into a super app.
Got it. So like a WAP or maybe like Slash.
Yeah.
These are the type of companies you're thinking of.
Two great teams that we work super closely with.
Nice, nice. Well, cool, man. Yeah, thanks for sharing, and this has been great. Yeah, hope to have you back soon.
Would love to come back soon. Thanks for having me. It was super fun.
See ya.